In this video, we will cover how to understand the language of markets following price action rules. The very first thing I need to do as a price action trader is I need to analyze the main market context. And what is the price action telling me right now? I'm going to start with the picture on the left because I can see that we have quite a decent bullish uptrend that closed outside and buyers attempted to create new extreme and they succeeded. So right now I can see that according to trendline rules, this bullish channel has a break new extreme. So I can expect brand new market cycle, correction phase, or straight reversal. Now I have to ask myself, is market behaving as it is reversing? It is not, because we are below EMA, but we are not pushing below EMA strongly and decisively. EMA is for the most part flat, and you can see this is still very much a trading range consolidating structure. So for this reason, I'm not really too excited to be looking for any wider channel like this, because this is so sideways, resembling a trading range. I don't want to get trapped selling too far down when this is such a rangy market. Instead, I'm going to play it safe, and every single time you're not sure, playing the consolidation is the safer option because it helps you to not buy into highs and not sell at the lows. So we can see we have flat EMA, very much a consolidation correction phase after new highs. So I'm going to try to locate my key levels, and I'm just going to be patient. Okay, we have a couple second entry shorts, but they are not really good second entry shorts as a high probability setup. Okay, and you can see how the bearish push phase is getting smaller and smaller. The price level is significant and buyers are stepping into the market. We're breaking above EMA. We have a failed second entry short, unfortunately with a bad bar. And right now we can see bullish channel working higher to the top of the resistance. And when you're trading in trading range, you always keep in back of your mind that the sellers will sell at the top and buyers will buy at the bottom. It's fairly simple, but this is what I have to keep in mind. Let's see what's going to happen. Also, you can see not only I respect this bullish channel, I also need to draw the correction. Okay, because there are small corrections even during main channels, and I can only go long if the correction is going to play out. So right now I can see we have short and downtrend working lower, and EMA is not holding. We are instead reversing all the way down. Now your first question may be, do I expect new high of this channel? You're not, because you retrace too much of this uptrend. You're basically almost at the starting point. This means when a range is this tight, you switch, you adapt. Okay, you're no longer expecting new high because it's a tight trading range. You retrace too much and you are thinking bearish. I have a new low, first entry short, pullback, second entry short. Now this is a two-legged pullback. Now this is how market moves. The downtrend needs to get new extreme, and this is a second entry short. Okay, at the EMA, while the trendline rule says we need to get new extreme, but the signal bar is important component of your setup, overall trade, and my signal bar, my chart ended up quite neutral, doji, and for this reason, I'm going to mark it more aggressive. If you have better bar in your chart and you took a setup like this, great setup. Now you have small overshoot, but you don't have to be too worried because these two legs are super broad. They're too broad, separate from one another, clear break new high. When it resembles like two legs, you expect new for the downtrend. So this is what I'm looking for. Second entry to the key entry point. Okay, we have new extremes, so I'm going to pause looking to sell. But notice from the very top all the way to the bottom, not a single close above EMA. This means the bias is still more bearish. So I'm not selling into lows, but I want to go long just yet. I would need to see some push above EMA confirm that there is bullish momentum. This is not happening and we keep trending lower. Okay, so what I'm going to do, because after new low we keep pushing lower, I'm going to make my channel a bit wider, copy, put it at the bottom. I have so many confirmations and I have overshoot. Now overshoot means that the trend channel line got broken and there is oversold area, oversold territory. This is not what is the market equilibrium, and you expect stronger correction in the opposite direction. So once I see overshoot, we can break the channel or reverse. Now in a situation like this, it's going to be important how this break area is going to react. If this break area is not going to hold and price action is going to continue working higher, you are thinking bullish back into trend range. And if this break area is going to hold, convert into resistance, you expect bearish resumption. I can actually move it a little bit lower. I believe this is how I had it when I was watching this real time. Okay, we have a break new high. I'm going to mark my new extreme. So right now, I'm thinking that we're going to go lower because we have broad two legs. The key level is not rejecting exactly as I would like, but we are getting some reaction. Now I have a lower high. What do you think? Can I sell lower high? I cannot. There is no push below EMA. I can only sell after there's a push below EMA. And why? Because we had overshoot. And overshoot, you can see how nicely the channel fits, candles inside the channel. It can generate strong momentum. So I would need to see push below EMA or fail second entry long. And at this point, it's too much congestion. Market continues working higher. Now, once I see break new high, I'm going to redraw the wider uptrend. So nothing for me to do. I just need to be patient. Market continues working lower. Now it means we're going to get new low for this channel to the left because we have decisive push down. We have a lower high, but we're still so far away from the EMA. And now we have second entry short as well, but you're selling too far down from the EMA. Context wise, we need to get new low, but unfortunately we cannot take it. We have a new extreme to this downtrend, and I need to pause looking to sell. So right now you can see price action very much a trend range all over the place. When I'm not sure, I'm really trying to follow the shortened channels. I want everything to align, and this price action is not super easy. So I expect bullish push up, but I can't just go long just yet. Failed second entry short would have been nice above EMA, but the EMA didn't hold. You have a failed second entry short below EMA, so I cannot take it. Now this was the area I really expected for this bullish channel to pick up steam, get a second entry long at the EMA, but market completely proved me otherwise, and you can see market completely reversed out of nowhere. So I have to adapt. I cannot overthink it. I can see that the price action is just strongly reversing down. I'm going to redraw a short and downtrend. This is massive pivot. We're working lower. We have a break new extreme. Now we have a second entry short, but the signal bar on my chart is straight doji, and there's a small break annual of the downtrend. Now the downtrend is quite strong, so second entry short, a good signal bar would have been okay, but the signal bar on my chart is doji. I really need to see a lower high confirmation setup of the second entry short when there is something wrong with the second entry short, and in this case the signal bar is the negative. It's okay, we have new extreme. I'm pausing my short. We have a triple test, tempting, work for a scalp, but we have new low. Right now we're consolidating. We're going higher. We have a large two-legged pullback, first leg up, break, second leg up. Okay, we're working lower. And what are you analyzing right now? Zoom back. Well, number one, the big picture is very hard to identify right now. You have trend range at the top. We broke lower, so this is more bearish, definitely. But local price action means we have flat EMA and we have consolidating structure. So what you can do is you can find the support and the resistance. You can see how better right now it fits and how it represents the price action. I have two-legged pullback up, move down. I'm going to redraw a short and uptrend, and I can see that the resistance coming into play, a lower high, failed second entry long. Can I take failed second entry long? I cannot. There's a chance that the bulls still gonna make new high for this uptrend, and we're above EMA, so I'm gonna be patient. Okay, and I have another count reset, kind of like a first entry long pullback, second entry long failure, and this time we're below EMA. The resistance was confirmed. The sellers are coming to the market, and we traded down. We traded down into the trend range, so you expect for price action to continue working lower. You expect the stronger bias to be bearish. Okay, you're gonna zoom back. We are overall trending lower. We traded down, break new extreme, brand new market cycle, consolidation. You can see series of lower highs, and this is a decent high probability setup. Now you have a lower high. Can you take it? You cannot. You're so far away from the EMA with the body. And actually what happened here, it first ticked lower, generated the first entry short, reversed back up, and then tick lower again, creating micro second entry short. And now you have two bar reversal, double rejection of the EMA, and this is confirmation of the second entry short, so you can consider second entry short. Market continues working lower. I have a second entry short fire from the EMA, and how I'm going to assess this market structure. I can see clear series of lower highs. We had a trend range, but the bearish bias prevailed, and because we have push phase, correction phase, push phase, significant one, I'm gonna look for wider channel. I'm gonna measure the first swing, you can see how nicely the price action market geometry allows me to find the right channel. I'm gonna put it at the bottom. I'm also gonna find a small channel for the push phase just to confirm that I'm analyzing and following the price action correctly. So now the bearish bias is clear. Finally, we have a clear trend. I'm looking for two-legged pullback at the EMA. Okay, but we don't get it. I'm gonna follow the shortened channel. Always respect the correction. Just because you have a main trend identified, that doesn't mean you can just blindly sell any pullback, because there's going to be correction and you want to make sure you know where the bulls played out. You have break new extreme. What I want to see right now, failed second entry long, below EMA, new high, first entry long, pullback, second entry long failure. Can I take it? I cannot. It's not only still above EMA, but it is congested and a bad signal bar. So we have three negative factors: bad bar, above EMA, and congestion. Flat EMA in the middle of these bars. This is the worst type of congestion. So you gotta be careful. And now we have actually failed breakout second entry short, new low first entry short, second entry short. But there is no key entry point. You only have double top. You know, very, very advanced trade. I'm hesitant to market because you really need to know what you're doing. Because how do you know there's not going to be the one little pullback higher? A lot of times that can happen back to the key entry point and then drop lower. So I think you need to see that new low, kind of like a lower high confirmation of this failed breakout. And market continues working lower. And you have a new low. So you still expect bearish bias to continue and you want to see high probability setup, second entry short. And now you have second entry short. And also you have new high, first entry long, second entry long failure. So two high probability setups in one. Textbook setup in price action, but you can see the bar is just way too big. When I was watching this live, I waited for break below this bearish bar and I dropped my limit order somewhere around here, one tick below this bullish bar, because this bar is just super big. You can't risk so much negative risk to reward. So unfortunately, I can't really take it safely, but context wise and price action wise, this is the setup you want, and it would have generated quick, easy scalp. But you really need to use the limit order because this was just too big. But you can see two high probability setups in one at the EMA. The more reasons you have to enter, the better. And now we have congestion. Another failed breakout. Very similar to what happened here. But even the failed breakout itself is congested. We have a second entry short. Can we get lower high below EMA or failed second entry long? Why? Because this downtrend is expected to get new extreme according to trendline rules. And we don't have a lower high. By the time we get a lower high, it's too far down. We can't take it. We created a new extreme for the downtrend. So this is why we're looking for channels. It helps us to navigate the price action. We know as long as this downtrend is in play, we're looking to sell. Now that we have a break new extreme, we expect correction or reversal. So what I can do, I can mark a potential trend range. Why am I doing this? Well, because market may enter a brand new market cycle, correction or reversal. Let's see what EMA is going to do. We have a second entry long, but we have a horrible bar, inside bar. And market is strongly reversing, followed by overshoot. And this is going to be pretty much it for the day because I didn't really see any good setup after that. Before I'm going to wrap up, I want to talk about this particular week, because this week was probably the hardest week I have traded in my entire career. That's how challenging the price action was this week. I mean, I didn't take any setup yesterday. I think I didn't take any setup Monday, just a lot of waiting, because when you're trading, you want to make sure you're anticipating the high probability setup beforehand. You want to make sure you understand what is the bias, what is the context, and you're just tweaking the key entry point. Every single time you're unsure and you're second guessing yourself, is the market going up or down, that's where you're more inclined to gambling, and you really need to master patience. This week was really challenging, and if you're a beginner trader, I understand, because as a beginner trader, as a developing trader, you want to make sure you trade every day because you want to feel like you're progressing. You want to feel like you're moving forward. And this week, you may feel like you're stalling, and maybe not even stalling. It may feel like you're going backwards because the price action was hard to read this week, and you really shouldn't gauge your trading performance based on this week, because I've been trading for many, many years, and it was quite challenging to really find clean, easy, high probability setups. Now, this is normal. There are going to be times like this. You know, it will pass. There are going to be good days again. but market will weed out weak traders like this. 90% of traders fail. Trading is a skill like anything else that needs to be mastered. You need to learn the technical aspect. You need to learn to understand yourself, what holds you back, what mental demons you have. And this is not a get rich quick scheme. You have to take it very seriously. You need to study every day, work on your mentality to make sure you're not getting too emotional, you're not giving in to your mental demons. So this takes time to learn. You know, trading is easy, but it is the hardest easy money you will ever find. And in order for you to trade 2 hours per day, take your money and go away, you need to earn this privilege. You need to earn this privilege to find trading easy. You need to earn your stripe, pay your dues. And one way you're going to do it is you're going to make sure you're going to be a professional trader. You're going to act like a professional trader throughout these times where the market is changing, because this is what no one talks about. On social media, you see everybody catching these gigantic trades, but there are actually times where you just have to sit here and not trade, wait for setup to actually form as you want and as you expect. So if you are struggling, you shouldn't really feel too bad about this, because this will pass. Challenging week. If you're patient, good job. If you took few setups, good job as well, because this is really what's going to set the foundation in the long run. Because if you're not feeling the need to trade every time, if you're not feeling the need to jump the gun, that's actually an important skill that you need to have. A lot of traders also will start to feel the need to start adding things. Maybe let me just add Bollinger Bands on a chart. Let me just add RSI so I can look for these divergences, because they're looking for some shortcut, for some tool to skip the learning process. But you have to learn this, you have to earn this, okay? This is why most traders fail. They just trade for a few months, they go and they switch to brand new thing, brand new shiny strategy. It doesn't work. They go switch to brand new shiny strategy and then go back and forth and never really progress, never really go anywhere, okay? So you really shouldn't feel discouraged. You know, next week will be much better, because honestly, I cannot recall long periods like this where the price action would be challenging. Now, that doesn't mean the price action wasn't working. Price action was still working, but just it wasn't that easy to find good setups every single day. But this is the big picture for today. I am going to wrap it up. I hope you had a good week, and I'm going to talk to you next time. Good luck with your trading.